Hello, today we're going to talk about how to find out net present value of the project. Typically, as we mentioned, there are so many information in a project proposal. So we're going to identify incremental cash flow, and here we're going to put them into three categories. Number one, how much cash flow produced from operations when we sell goods, collect money, how much is the cash flow from revenue. Secondly, as we mentioned, oftentimes you need to support net working capital. So we want to understand how much cash flow activity in the net working capital supporting and recovery. Normally, you need to buy equipment at the beginning and sell them in the end. So these belong to capital expenditure. We call net capital spending. So the three categories: operating cash flow, change in net working capital, capital spending. So all of them together are the total cash flow created from the assets. So we call cash flow from assets. Sometimes we also name it project cash flow. Important thing is about timing. I want you to take a look at this example. I put down the timeline of 5 years. I also listed three categories. So the capital spending, normally we'll buy machine before we start operating. So this time 0. Sometimes we will select the machine and end. The machine has residual salvage value. So this tend to occur at the end of the project. I put after-tax salvage value, ATSV, to indicate a lot of times you need to adjust the tax effect for this salvage value. So that requires a separate calculation. Once we start operation, we have sales revenue. We want to understand operating cash flow. Remember, operating cash flow does not occur until we really put into operations. So we normally have operations start from year 1, not year 0. For net working capital change, in this case, we only have one time spending at time 0 before we start operation. But remember, do not forget to recover this amount in the end. Sometimes they don't specifically mention that net working capital recovery in the end. You still need to recognize and add them back. So after we finish the three categories, then you can add up all three of them, figure out the cash flow from assets from year 0, 1, 2, 3, 4, 5. So to find out NPV, you have two ways to do the calculation. One is use the formula, discount all these cash flow back to time 0. And another approach I'm going to show you later on is use financial calculator, the cash flow keys. So in summary, my recommendation is always draw a timeline table, list all the years, list the three categories. So that helps us to organize those information into different categories and also focus on specific calculations such as ATSV, operating cash flow. Let's look at this example. The company is thinking a new pretzel twister. The machine costs $20,000, depreciate all the way till 0 over 2 years, straight line basis. The machine will be sold for $3,000 after 2 years. It's going to bring in sales of $50,000 every year and cost $35,000 every year. The project will require additional spending in net working capital of $5,000, which will be freed up at the end of the project. Tax is 40%, discount 12%. Let's take a look at this template. I put down already year 0 and year 1, year 2, and this project lasts 2 years. And 3 categories: capital spending, change in net working capital, operating cash flow. So let's first fill in what information we know directly from the question, then put down the name of the calculation we have to calculate separately. So the machine costs $20,000. This belongs to capital spending. So we spent $20,000 at time 0. In the end, machine will be sold for 3,000. I'm going to put ATSV here. Means we do have to redo salvage value. Okay. This requires separate calculation. Let's take a look at net working capital supporting. At beginning, it requires 5,000, which will be freed up in the end. We're going to allocate 5,000 at time 0, and in the end, year 2, remember we're going to recover this 5,000. Now, operating cash flow. Okay. So we do have to use a separate calculation to understand how much is the operating cash flow from sales. We listed some information we know already. Now we need to going to do 2 more calculations. Let's do TSV. The machine is sold for 3,000. That is salvage value. The tax is 40%. The difference between the salvage value and the book value. Remember the book value of the machine is going to straight down all the way till 0 at the end of year 2. So at the end of year 2, the book value is 0. So this calculation gives us ATSV is 1,800. So I'm going to put 1,800 here. One more to go, OCF, operating cash flow. I will show you how to solve using a tax shield. You can find out the bottom-up approach at the answer later on. So we have sales revenue 50,000, operating expenses 35,000. So the difference, we have to pay tax 40%. We also have depreciation of, let's find out. The machine cost is 20,000. The book value is 0, straight line over 2 years. So this is a depreciation tax shield multiplied by 40%. Use calculator, we find operating cash flow is 13,000. So now let's replace the OCF with 13,000. Okay, now we finished fill in all the blank for 3 category. Our job is going to figure out the cash flow from assets for every single year. So we simply add up from 3 categories. Year 0 total is negative 25,000. Year 1 we have 13,000. Last year we have 3 items, so the total of 19,800. So we get a cash flow total done. Here is the detailed step, both tax shield and bottom up for operating cash flow calculations. And this is the after-tax salvage value. So once we get the cash flow from assets, we are able to solve net present value, either use formula or cash flow keys. For formula, we need to bring back the cash flow in year 1, cash flow in year 2, all the way till time 0. As discount is 12%, for year 1 cash flow, we discount by 1 year 1.12. For second year cash flow, we discount 1.12 square. So the total answer is $2,391.58. So based on the positive NPV, we can now recommend the company to make this decision. It's a good project. Now, let me show you how to find out net present value using financial calculator. The one I'm using is BA2+. Okay. To find out net present value, basically, we use the second row of keys in this calculator. Turn on your calculator, we press cash flow keys. So the initial cash flow 0, is negative 25,000. So we're going to enter 25,000, negative. Please remember, always click Enter key after you enter number. When you see decimal displayed, means this number is recognized and remembered. Now, go down to ask for the first year cash flow. The first year cash flow is 13,000. We're going to enter 13,000. Again, click on Enter. Go down to ask for how many times we repeat this cash flow. As we only have one time, 13,000, so we're going to keep this at a default value 1. Continue, go down. Next year cash flow, we enter 19,800. Click on enter, go down. Again, this also repeat one time, so we keep this as default. We only have two-year cash flow, so the cash flow 3, there's no need to change. But I would suggest you go through at least one more year to see if you forgot to clear your numbers. After we're done entering all the cash flow, we will going to click on the net present value or IRR keys. In this case, we want to find out the net present value, so we click on net present value NPV. It asks you to enter the discount rate. In this case, the discount is 12%. So we entered 12. Click on enter. Please do not enter 0.12. They only want you to have the number before the percentage. Use the arrow key, go down. When you see a net present value, it's now the time to click calculation. Click on the compute keys. We got a net present value of $2,391.58. So again, my recommendation, use a template, fill in the information from the question, do the calculation separately. Lastly, use formula or cash flow keys to find out net present value. Next, I'm going to talk about a type of project. It does not actually change your number of products or service. It actually cut down expenses. We noticed in recent years, a lot of houses installed solar panels. So this is going to cut down your utility bill, cut down your electricity bills. Same thing, similarly in investment. Sometimes you can replace with a new efficient machines, equipment, automation system. So this is going to cut down your expenses, although you do not directly increase your sales revenue. For example, if the project cut down operating costs by 10,000, so you can think about operating cost is down by 10,000, or net revenue increased by 10,000. Either way, it's a positive 10,000 savings. Later on, we will notice, even we do not affect sales revenue directly, cost cutting could have positive operating cash flow. Let's take a look at this cost cutting example. The machine cost 80,000 to buy and install. The machine has 5 years life. It's depreciated all the way till 0 over 5 years. It's going to be worth 20,000 in the end. The automation system will save us $20,000 per year before tax by cutting down labor and material costs. The tax is 34%, discount is 10%. So, how should we make recommendations? Again, I'm going to suggest us to have a timeline table on the right, put down 3 categories and 5 years. Always put year 0 first. For this question, the cash flow activity for year 1, year 4 are the same. So I'm going to put them all into one category. So let's first fill in some of the information directly from the question. Capital spending, buy and sell machines. The machine cost $80,000. So I'm going to write down, and will be sold for $20,000 in year 5. So we're going to write down this require a ATSV calculation. There's no change in net working capital in this question. And let's figure out OCF from year 1 to year 5. So ATSV calculation. The machine is sold for $20,000, tax 34%, salvage value 20,000. In the end, the machine will be depreciated all the way till 0 in year 5. So year 5, when we sell the machine, book value is 0. The ATSV is $13,000 and 200. Now let's do the operating cash flow. I'm going to show you how to solve in tax shield. So there's no sales revenue, but we saved 22,000. So this is the net increase in the revenue. So this portion we have to pay tax. The annual depreciation is 80,000 over 5 years. So this amount we have to 34. Use calculator. We found out OCF is 19,960. Now we can add up all this information from 3 categories. Year 0, we only have 80,000 outflow. Year 1 to year 4, we have 19,600. And year 5, we have 33,160. Let me go through the detailed information for you. Here I listed how to solve operating cash flow use both tax shield and bottom up. This is the bottom up in the table layout, and ATSV for selling the machine in the end. So after we're done, right, so you can use net present value to find out the NPV. Let's practice use financial calculator to find out this NPV. Before we do that, I want us to clear the cash flow keys. So first, enter the cash flow. As you see, we still have number stored from previous calculation. So press second, press clear work. So we cleared all the numbers. So again, we have the information total cash flow from assets for year 0 till year 5. Press cash flow 0. The initial, we have negative 80,000, negative, enter. Go down for the first year cash flow is 19,960, enter. Okay. Now ask us how many times we repeat this cash flow. As we have 4 years, same amount, I'm going to change the frequency as 4 for enter. So although the next one say the cash flow 02, but it's just saying what's the next cash flow following the previous one. So we're going to enter year 5's cash flow, enter. So this only occur one time, okay? That's it. So we've done cash flow preparations. Then we're going to go to net present value calculation. Click on NPV key. Ask us what's ROI. Enter 10. Okay, enter. Do not put 0.1. 10. Go down. When you see the NPV in the screen, I'm going to click on compute. So we got 3,860. Again, this cost cutting is positive NPV project. We're going to accept that. Here's another examples to practice cost cutting, and the main difference compared to the previous one is we use macros depreciation schedule instead of straight line. So I would say again prepare an Excel or timeline table, and you're going to first figure out the annual depreciation. Excel will comes handy because this time the depreciation amount change every single year. So every year the operating cash flow will be different. So once you're done, I want you to go click on Excel and check your numbers. To summarize, the best way to find out net present value for the project is to organize all the information in a timeline. From year 0 till the last year of the project, and list the 3 categories and fill in the easy information and do the calculation separately. Lastly, use cash flow keys to find NPV. Thank you.